This clean energy penny stock is set for a big 2023. This is a Nasdaq listed company with a market cap of less than $500 million, but they have supply contracts worth more than $100 billion with some of the world's largest and most respected companies. Contracts with state-owned companies and with US government departments. When I last spoke about this stock, I said that it was about to gain 20% in the coming weeks and would test resistance at that level, which is exactly what happened, so congratulations to the thousands of investors and traders who watched that video and banked some easy money. The stock that I am talking about today is of course Gevo Inc. This stock is heavily backed by institutional investors, the main ones being Blackrock, State Street and Vanguard, who own close to 50% of the outstanding shares of the company and have been adding to their position. And it is very easy to see why these companies are not selling their shares but are actually adding to their position in Gevo. I will discuss all of this in this video and give you my prediction for short-term gains when I look at the technical analysis later in this video. So if you enjoy my videos and want me to keep creating regular updates, then can I ask you to smash the thumbs up and subscribe to the channel if you're new. I'm aiming to get 200 likes again on this video, help me achieve this goal, and turn on notifications to make sure that you do not miss out on any new content like this. Now, let's get straight into it. Who are Gevo? Gevo Incorporated is a renewable chemicals and advanced biofuels company. Focused on sustainability, Gevo addresses the market need for reducing greenhouse gas emissions with sustainable alternatives, and is commercializing the next generation of biofuels with diesel, gasoline and jet fuel that have the potential to achieve zero carbon emissions. Gevo uses low carbon renewable resource-based carbohydrates as raw materials and is developing renewable electricity and renewable natural gas for use in production processes, resulting in low-carbon fuels with substantially reduced carbon intensity and substantially reduced greenhouse gas emissions. Gevo believes that its proven patented technology enables the use of a variety of low-carbon sustainable feedstocks to produce price-competitive low-carbon products. In addition to addressing the problems of fuels, Gevo's technology also enables certain plastics such as polyester to be made with more sustainable ingredients. Gevo currently operates two main plants where feedstock is separated into its components and the starch goes to the fermentation process to make biofuel, while the protein becomes animal feed that is fed back to cows, which they use to produce natural gas. Gevo produces a range of products such as jet fuel across a wide range of markets, including the aviation industry and the automotive industry, providing Gevo with an enormous total addressable market of 888 billion gallons per year. Gevo's next earnings report is due next week on March 9th and will give a significant update on the company's current standing. However, with the market cap of Gevo stock currently sitting at just $450 million, I see this company as being very significant value at the moment. When we look at the charts, we will see that the stock has leveled out over the past few months and is sitting just above the stock's lowest point for several years. Trading volume is still a few million shares every day, so there is significant interest in Gevo stock. And looking at the stock's moving average, over the past 3 months, we can see that Gevo has begun to flatline. It has dropped as much as it will drop, and I will explain in a moment with the help of the most recent earnings report. When we look at Fintel data, we will see that Gevo has major support from institutional investors, the likes of Vanguard Group, State Street and Blackrock, being the major investors that have been increasing their positions. In fact, looking closer at this, we can see that they own nearly $200 million worth of Gevo stock. So when you consider that the current market capitalization of Gevo is only $455 million, that amounts to these major investors owning close to 50% of the company. Now, sometimes it's easy to forget that the likes of BlackRock and Vanguard have positions in most stocks on the market, but it is rare to see these institutions in particular owning such a significant portion of a company's overall stock. And looking at the financial statements, I think it is easy enough to see why they don't feel that this is a major risk. When we look at the balance sheet of Gevo, we can see that they have total assets of $729 million and total liabilities of just 104. This gives the company a total stockholder equity valuation of $624 million. So its equity valuation is about 150% of the company's total market capitalization. So based on this, the company could be considered to be about $200 million undervalued at its current price. Now, usually in this situation, I would expect to see that the assets would be largely made up of something intangible like goodwill, and that would explain why the company is undervalued to such an extent. But this is not the case for GEVO. There is no goodwill on GEVO's balance sheet. In fact, GEVO's cash and cash equivalents, their current market securities, and the long-term restricted cash actually amount to nearly 500 million, which means that the market cap is actually below their current cash value, which is incredibly rare to see. And in terms of liabilities, although the total is 104 million, over $67 million of this is made up of long-term bonds, with only 17 million of current liabilities. These are the liabilities that are due within the next 12 months. 17 million is only a fraction of their net cash position. So as I said a moment ago, it is easy to see why the likes of Blackrock and Vanguard are not selling this stock and don't consider this to be particularly risky to hold. This is still very much a long-term play. Now, when we look at the company's income statement, GEVO had very little income to date. This is to be expected of any pre-revenue company, and this has been the way for GEVO for the past number of years. But as the company has moved closer to their Net Zero 1 facility and other projects, we will begin to see revenues shortly, and this should be a turning point for the company. But there is much more to this. I find that a lot of investors seem to be forgetting that this is not just any pre-revenue company who have yet to find a market for their product. This is a company that already has contracts in place to sell their product, they just need to produce it. Once GEVO get their facilities into full flow, they can start supplying and fulfilling contracts that they already have agreed. These are major contracts with some of the world's biggest companies. Just look at deals like this that they have already signed and are just waiting for GEVO to be able to produce. Iberia Airlines, which is Spain's national airline, 6 million gallons per year for 5 years. Qatar Airways, one of the world's 2 biggest airlines, 5 million gallons per year for 5 years, and these are just the latest contracts. Alaska Airlines, 37 million gallons per year for 5 years. America Airlines, 100 million gallons per year. Aer Lingus, 6 million gallons. Finnair, 7 million gallons. Japan Air, 5 million gallons per year. Then there is the deals with Delta Airlines and One World Alliance for 75 million gallons per year and 200 million gallons per year. As you can see, these are all major contracts with not just major airlines, but a lot of these airlines tend to be their country's national airlines. These are companies that tend to have state ownership or at least semi-state ownership and do massive due diligence before signing any contracts with suppliers. These are massive contracts. Between these deals there is approximately 500 million gallons per year from just the contracts that I have mentioned. And as we can see here, the Delta Airlines agreement is valued at approximately $2.8 billion of revenue over the 7 years. $2.8 billion. And yet this is only a small fraction of the overall contracts that the company has signed. Like with many of the biggest companies in the world, it takes years and years before they ever get to production, and this has been the case for GEVO. Now the bad news is that GEVO are still several years away from being in a position to significantly supply these contracts, but they are not that far away from beginning to supply, with the Net Zero 1 project set to begin production in 2024. Which means that once again there will be very little revenue this year and they will incur losses once again. But look at the losses. Their loss for full year 2022 will be approximately $100 million, but they have cash and securities easily to cover at least 1 or 2 more years without any major issues. That being said, GEVO have hinted at raising cash by issuing debt and some dilution will be likely. But recently, GEVO appointed Carol Battershell as director. She previously served as principal deputy director in the Office of Policy at the US Department of Energy. In her 10 years with the DOE, Carol led multi-billion-dollar technical programs, ran the Energy Efficiency and Renewable Energy Field Operations Office, and was a contributor to 2 multi-agency energy policy reviews. So clearly she is a very well-connected person who could prove to be a valuable asset to GEVO. Prior to the Department of Energy, Carol worked for 25 years in the energy industry for BP, where she held roles in operations management, strategic development, financial management, and policy development. But it is the timing of this appointment and Carol's connections that interest me the most because of this. At the invitation of the Department of Energy, GEVO has submitted Part 2 application to the DOE's Title 17 Loan Agree program and have begun the DOE's loan guarantee process. This process could take several months as the Department of Energy Loan Programs Office perform due diligence on the project. So what do you think about this? I think the appointment of Carol Battershell will play a huge role in the process of GEVO getting this loan over the line. And look at this, to date, LPO loan has provided companies with more than $30 billion in debt financing. This loan would significantly reduce the need for GEVO to dilute shareholders. When we talk about upcoming catalysts for stocks, this is a major one. So as I said earlier, it is no surprise to me that the likes of Blackrock and Vanguard are happy to sit on this stock and own nearly half the outstanding shares without selling. But tell me what you think. Drop a comment down below. Personally, I feel that if the company gets the loan approved, then this will provide the finances needed to get all the way to major production. It will erase the need for dilution, it will erase any doubts about the long-term potential for GEVO. And I feel that this will send the share price soaring. This could make several 100%. Remember that the current market cap is only 450 million, but they have contracts that could amount to hundreds of billions. So the question now is one of timing. So let's look at the charts. Before we look at this, here is some analysis that I did back in December. I said that this will make an easy 20% within a few weeks, up to a price of about $2.18. Look at it now. The stock hit the price exactly like I said it would on the 18th of January and proceeded to hit resistance at this level several times throughout January and February. Guys, this is not rocket science. Sometimes it's very easy to see what's coming, as long as you know what to look for. If you appreciate this analysis, or even just appreciate that I was exactly right with my previous analysis, then all I ask you to do is hit the thumbs up on this video. Of course, if you want to catch these stocks before the runs and make the gains, then I highly recommend that you hit the subscribe button and turn on notifications. Looking at the charts today, we can see that there is a clear upward channel that the stock was moving in just after hitting bottom in December, hitting resistance several times in January. Then the downward movement came in February. However, GEVO has gone and hit bottom again in the past week and started to move upwards on Friday. With a very positive RSI and earnings coming later in the week, I think there is a chance to make nice short-term gains on GEVO stock once more, and any significant news could push this to break resistance. So guys, what do you think of that? Are you bullish on GEVO in 2023? Or do you think that there is a better play in the clean energy market? If you enjoy my videos, then help me stay alive on YouTube and smash the thumbs up. Subscribe to the channel if you're new. Drop a comment down below and let me know your thoughts. Also, I only took a quick look at the charts in this video, and I have been asked many times to cover more technical analysis in my videos. So what do you think? Is this something that I should do? Should I look at the charts in more detail in future, or should I focus more on upcoming catalysts and fundamental analysis? Like for example, in GEVO's case, the new director and the progress of the loan application. Let me know your thoughts. And remember to vote on what video you would like to see next. As always, I do try to respond to all comments, and whatever is voted for, I will make a video about. If you are not a member of the Discord community, then check that out and talk to me about what you think of any stocks. Thanks for watching, and I'll catch you in the next video.